Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today is the 13th of June 2019, so welcome everyone. Welcome to this Thursday's morning session where we're going to have a look at the markets, a view of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest, and we can continue. Okay. Also, just a quick mentioning here, I would like to kind of suggest you to kind of sign up here to subscribe to our JFD channel on YouTube, just so that you wouldn't miss any of the videos that we produce, any webinars. So yep, and I believe that you can find a good value in those. So yep, feel free. We do present videos in English and German. So yep, feel free to check us out here, and let's see, maybe you can, like I said, maybe you can squeeze some profits out of it. So but for now, guys, let's quickly jump into the charts. Now the first one I want to touch on here is the Nikkei Nikkei225 index. So looking at this one, the Japanese index traveled higher. It managed to break this downside resistance line, the short term excuse me, this short-term downside resistance line taken from the high of the 25th of April. It managed to break it to the upside on Friday here, and yep, continued pushing higher this week. You can see that it opened with a nice gap here to the upside this week, and managed to test the area near the 21,250. So this area acted as a good area for good resistance, and the index kind of slid back down. And now it's kind of closed today. It closed the day in the negative territory. For now, we still remain somewhat bullish on this one, but probably even actually more cautiously bullish, because in order for us to aim for higher levels, ideally we would like to see initially a nice good push above these recent highs, this week's highs near the 21,250, and then probably just maybe for that better confirmation, a push above the 21,400. Now this has been a very nice area of resistance here back on the 17th and on the 22nd of May, so good potential area here could be a good one, and a nice good break above this would confirm a forthcoming higher high, and we could then target slightly higher levels. For now, we will remain somewhat cautious, as I said. We will keep an eye on this level here, the 21,250, and if it if the index manages to break that, then yep, we will consider higher levels. For now, if this decides to slide lower, the level that we're keeping a close eye on is, of course, this 20,666-65 zone, approximately there. But to be honest, if this continues to slide lower, in a way, as long as it kind of remains above this downside resistance line, this could be seen as a nice bouncing ground for this index, and then we could see this one reversing potentially and pushing higher again. The only thing is excuse me, the only thing is that for us to consider, let's say, further declines in the near term, well, ideally we would like to see a drop below these recent lows here, near the 20,285 zone, approximately there. So this way the index would confirm a forthcoming lower low, and we could aim for slightly lower areas. For now, it's quite far and it's quite distanced, has distanced itself from that level, but of course we'll keep an eye on it if this decides to travel lower. For now, like I said, for now we are somewhat, or even say cautiously bullish on this one, but we're waiting for that confirmation break here above the first, of course, above this week's highs, and then ideally above the 21,400 level, which in the end of May here, or on the 17th of May and the 22nd of May, acted as a good area of resistance. Jumping into a commodity, WTI. So I've looked at this one yesterday, and basically I was telling you guys to keep a close eye on this potential kind of move here that we could have. And as you can see, the target for us was this area here near the 50.60 zone, approximately there. It just fell shy from just a few points of hitting that level. And as you can see now, it's reversing, trying to at least to reverse back up. Still, we are more let's say skeptical about the upside here yet. But in order to continue targeting lower areas, ideally we would like to see a drop below this 50.60 zone. If we do see something like this, then yep, we would confirm a forthcoming lower low, and then we could aim for the S1 and this S2 here of today's pivot points. But the last one here could be around the S3, which is around the 47, but that could be quite a drastic move here from WTI. So for now, we're just going to keep it short and simple. If we see a drop below the 50.60, yep, we will aim for the S1, which is around the 50.17, something like that, 50.15, something like that, or the S2, which is around the 49.30 zone. So keep your eyes on this one, and keep your eyes on the potential breaking point here near the 50.60. If this decides to reverse higher and breaks above this short-term downside resistance line taken from the high of the 21st of May, well, for us still to get comfortable with higher levels, ideally we would like to see a push above the 54.60 level. This way it would overcome this key area of resistance, and then we could target the areas like the 56.87 or even the 200 EMA. For now, let me just quickly actually highlight these two areas so that we would know what to come back, and we would know what we were talking about in the next video. When we're gonna talk about WTI again. So these are the levels that we're keeping a close eye on. So yep, let's see how this is gonna play out, and could be quite an interesting trade. Now, jumping into a few pairs. Now, I talked about these pairs yesterday in my Trader's Tea Time, but just a quick refresh, kind of refresh on these few. Basically, in my tea time yesterday, we were talking. It was trading here. It was trading around the near the 138.17 level. But what I was saying that we need to see a nice good close of the 4-hour candle above that level before we could continue targeting higher levels. Of course, at one point, like I said, it did look quite good. It did look positive, but you can see it never closed the 4-hour candle above that level and quickly reversed back down and traveled to the downside, broke below this short-term tentative upside support line, and now it's testing the lower side of this little range, this very tight range here near the 137.45. We can actually get rid of this upside line now. I mean, it got violated, so what we're going to focus here is mainly on these two levels. So basically, if we see a nice good clear break and ideally a close of the 4-hour candle below the 137.45, then yep, we will target slightly lower areas. And by slightly lower areas, I mean the lows of the 4th of June here near the 136.56 level. You can see that the previous 4-hour candle did manage to break the this lower side of the range, but kind of never kind of closed below it. So that's why for now we're gonna wait and see here. Certainly it is, as you can see now, as we talk now, we can see that it is trying to push lower. The only thing is that, well, we've seen these types of moves happening probably almost every day, so be very careful with this one. Wait for that confirmation close. If we do see something like that, then yep, we could target slightly lower areas. In terms of the upside, still for us, this level remains the breakout point, the 138.17, but then again, we need to see that, as I mentioned before, we need to see that nice good close of the at least of the 4-hour candle above this 138.17 before we could aim for higher levels. Jumping into USDCHF now, this is a pair that's going to be quite relevant in a few hours. I mean, we do have the SNB, the Swiss National Bank, coming out with the interest rate decision, but of course there's not going to be a lot of surprises there. I mean, the figure is going to stay the same, around probably minus 0.75%, but basically this could in a way affect the Swiss franc, maybe in a little bit of in a positive kind of way. It could push this one back down. So overall, of course, you can see that the yes, the pair has been drifting lower since the beginning of May, but recently kind of entered this little range here, and roughly between the 0.9850 and the 0.9949 is currently balancing around here. In a way, actually, we can lift this a little bit. Let me just bear with me one moment, guys. Just to lift it a little bit towards the 50 zone, so just to kind of have a nice, beautiful round number. So there we go. So basically that's what we're going to be looking at here. So we need to see that nice, good, clear break above the 0.9950 level, and then we will aim for higher levels. But as you can see, I've got my arrow drawn here from the level of 0.9962. That's just for that better confirmation of the upside here. If we see a push above that, then yep, this could open the path towards slightly higher levels. We will aim for the psychological 1 level, of course, and slightly above that we do have the 200 EMA, which also could provide a bit of resistance here. So the 200 EMA is in the 4-hour chart, of course, this so it also could be a nice target for this pair. But again, we need to see that nice, good, strong push above the 0.9950 initially, and then a 0.9962. So keep your eyes on this one. But if this, let's say, decides to slide lower, now again, as you can see, I do have my arrow here below, but from the very short-term perspective, what we could actually do here is look at this little potential area of support. So this is around the 0.9931, something like that. And if we see a nice good drop below this, then yep, in a way we could target slightly lower areas here. There's like the 0.9882 mark, or even this lower side of the this range. So keep your eyes on this one. If, like I said, we see a drop below the 0.9931, something like that, this would also, of course, place the pair below today's pivot, which could be seen as a bearish indication, and also could place the pair below its 21 EMA here, shown as the yellow line. So I hope you can see that. So and then yep, could see this one sliding further down, and yep, maybe even hitting the 0.9850 zone, which is the lower side of the of this little range that we've got. And the last pair, very quickly, is the euro dollar. So this is a bit of a messy chart here, but I've talked about this one yesterday as well a lot, and basically I was telling you guys to keep a close eye on some of these key levels. And basically, initially, of course, we did break this upside support line, a short-term upside support line taken from the low of the 31st of May. It broke into the downside nicely, but what I was saying that yeah, we may travel lower, but this is the area to watch. The 1.1290 is the one to watch, because we need to see a clear close below this level in order to kind of consider further declines, and further declines towards the 1.1250 or even the 1.1215. But for now, as you can see, it kind of nicely rebounded. It did try to break it below, break it initially, but never kind of closed the 4-hour candle below this level. So it's now rebounding, but the kind of the good sign for the bears is that it is still trading below its pivots. So in a way, you can see maybe the bears joining in again here, but probably more of them will be joining in here if we see a break below the 1.1290, and especially if we see a close of the 4-hour candle below the 1.1290, and then yep, we could see further slide. For us, the upside still remains the same. Actually, let's get rid of this upside line. We no longer need it. What we're going to focus here on is just this barrier, this key area of resistance near the 1.1348, marked by the high of last week. And then, yep, if we do get a nice push above this, then yep, we will aim for slightly higher levels like the 1.1390 or even above that. But as you can see, it's slightly has distanced slightly away from this barrier. So for now, we're just gonna focus on this area right here, the 1.1290. We'll see how that's gonna play out today. Okay guys, I hope you found it useful. Thank you very much for sticking around and watching until the end. And if you want to join me later on at my Traders Tea Time, as always, that's 13:15 GMT time. For now, I hope you have a wonderful trading day, and I'll see you later. Bye bye.